Home builders stocks, let's get on to those, rebounding today, but still having a rough start to the year. The group down 6% so far in 2022. And joining us now, PIMCO portfolio manager Erin Browne. Erin, it's great to have you join us. Interesting to get this take in terms of a sector that you're concerned about. Talk us through why.
So the builders have been on a tear over the last year or so. They materially outperformed the S&P. They're up about 10% relative to the S&P over the last year, up about 40% on an absolute basis. So certainly benefited a lot from really easy monetary policy and very low mortgage rates. And I think the tide's turning and shifting now as we start to see the Federal Reserve start to increase interest rates. And more importantly, perhaps for the builders, as we start to look to the back half of the year and start to see a balance sheet start to unwind with respect to the Federal Reserve, I think you're going to start to see the home builders much more materially underperform over the coming quarters and the coming year ahead. If you reflect back when the Fed started to increase interest rates back in 2014, 15, 16, 17, the home builders were able to do okay until you started to see the balance sheet start to run off and you started to see mortgage rates back up. And I think we're going to come into that period much faster this time around, as Jerome Powell highlighted earlier today, than we did during the last period of balance sheet unwind. And so as a result of that, I think you're going to see a lot more sensitivity to the home builders with respect to mortgage rates. And for that reason, given the fact that they've done so well, given the fact that the entire street right now is pretty bullish in their outlook for home builders, I think you're going to see much more material underperformance of home builders this time around. And we have a pretty bearish view on them.
What about within the tech space, given the pullback of the last couple of weeks? Are there any areas that you'd recommend people buy?
I think tech right now is a little bit oversold. There's this narrative that growth can't do well in an environment where the Fed is raising rates, and because tech is seen as a long-duration asset, it can't do well. I beg to differ with that. Firstly, I think that they're oversold. Secondarily, tech right now, particularly if you're picking the right spots within the tech market, are high-quality stocks. I, in particular, like the semiconductors, which I think are still going to have pretty significant pricing power as we move through 2022. There still is a shortage of supply on a cyclical basis, and on a secular basis, you're just seeing more chips in everything. There's more chips in cars. There's more chips in your household appliances. There's more chips in every, everything the consumer touches nowadays. And so I think that as a result of that, shortages are going to remain constrained for the supply chain, specifically with regards to semiconductors. It's a pretty bullish outlook this year for the sector.